staying squarely focused to India and India growth story. And, you know, every day on day, we're talking about the GDP growth. Numbers are not yet out for the first quarter of this financial year. But yesterday it was SBI. Today we're hearing ICRA saying that India could grow at 8.5% in the first quarter, Amit.
Yeah. So 8.3 and 8.5. Like I mentioned, there is something about this quarter. Last year, it was 13.1, the growth in this quarter. So probably because it's the first quarter after the closing of the books, maybe it is that fresh investment from the government side, maybe, or just good sentiments. But I think it is the first quarter. The next quarter, everybody is saying it will come down to 6% to even out. But yeah, so things are looking good.
Okay. Overall, I think what's heartening is that these estimates are higher than what RBI is projecting at the moment, which is about 7.1%, and all the other research agencies, rating agencies saying it's going to be an upward of 8%. Now, whichever way it is, 8.3 or 8.5, overall, the quarter gone by has done well for India, at least to put us on our growth trajectory and help us reach that goal by the end of this year.
Absolutely, Shweta. So I think any number that comes in excess of 7.6%
will be helpful.
To my mind should be helpful, right? Because let's keep that target. I think, you know, it's very easy in the day and age that we live in. It's very easy to change our goalposts. It's very easy to sway away from a charted direction that an economy needs to take. And I think the government has come out fairly squarely, without mincing words, has stated that by 2027, 2028, definitely by the turn of this decade that we are in, we are going to be a $5 trillion economy. We are going to be the third largest economy. And RBI has said that for us to reach that figure of economic growth has to be 7.6% per annum. So I think any quarter that data comes out over that 7.6%, we are in a comfortable spot. But any quarter when data comes below the 7.6%, that means the next quarter and next subsequent many quarters will have to more than make up
and
for the lost. Yeah, you have to play catch up, right? You'll have to, for every 1% lost, you'll actually have to grow maybe 2%, 3% depending on the multiplier, because it all compounds. So, you know, it's not a simple arithmetic mathematician sort of a formula that, you know, 2% कम हो गया तो 2% ज़्यादा हो जाएगा. It'll actually have to, you sequentially you'll have to grow at about 4% to play that catch up. Now, yeah, so SBI, ICRA saying 8.3%, ICRA saying 8.5%. All this is for Q1, and all of them, despite a robust Q1 figure, are linking the annual growth only to about 6.5% or so, right? So ICRA says 6.1% is its estimate for the financial year growth FY24. SBI EcoRap says in excess of 6.5%. So overall, if you see, even if you have had a robust Q1,
the Q2 will prove to be a dampener.
Q3, Q4 are not going to fire anything close to that number. So when the year ends, your annualized growth for FY24, if it is even in the range of 6.5, let's just take the higher of the two estimates between 6.1 and 6.5. Even if it is 6.5, you're a good 110 basis points behind your 7.6 to become a $5 trillion economy, to become the third largest economy. So as long as that target is there, then we'll have to ensure one way or another that that target gets met, right? I don't think governments should function any differently from how corporate entities function. If there is a guidance which has been given, then that you have to move in the direction of that guidance. Now, the challenge stems from the fact that if you want to reach that guided path and glide through it, the only machinery which should do the heavy lifting cannot be capex by the government. It cannot be only government's capital expenditure. You really need the growth to kick off when it comes to private consumption, and we have a booming middle class which pays tons of taxes. Amit is working on that story, and hopefully, you know, next week we can talk a little more in detail about the ballooning middle class taxes that get paid every year. But coming back to the point, you have to have a robust consumption story. If there is consumption, you will see a very, very direct pickup in credit from companies, FMCG, auto, IT, technology, the world over, to actually make more because they're able to sell more. But if there isn't this consumption picking up, if the consumer demand is not picking up, even if you were to get into a rate cut cycle and make loans cheaper, cost of capital cheaper, companies are not going to pick up those loans and make investments. And hence, the capex of the private sector or unleashing of the animal spirits of the private sector to make those investments is not going to happen.
Right.
So, what one needs to focus on is public consumption.